Hi, and welcome back to the Food Fund, where we analyze investing in food stocks, beverage stocks, and restaurant stocks. If you are new here, our goal is to help you put your money where your mouth is and invest in the best food companies. Is the world's most popular sports drink a good investment now? You might be surprised by the answer. In this video we will be analyzing if Celsius stock is a buy. Could Celsius, stock ticker symbol CELH, 10x over the next 5 years again? Let's find out. We have a lot to cover, so let's go ahead and jump right in. Cue the logo. Let's start with some background info on Celsius. Celsius was founded in 2004 as the premier functional beverage company, designed to provide additional health benefits beyond hydration. These drinks propelled massive growth after a major marketing push that targeted millennials and health-conscious consumers. As a result, Celsius share price saw a significant jump. Following their initial public offering in 2010, the company solidified their position in the functional beverage market. Today Celsius is headquartered in Boca Raton, Florida and employs around 765 people. Now let's look at the price action. Starting with the 1-year chart, we see that Celsius had a CAGR of about 177%. Zooming out to the 5-year chart, we see that Celsius had a CAGR of 125%. Celsius share price appreciation has been ridiculously great. If we perform a backtest comparison of investing $10,000 in Celsius versus the S&P 500, we find some amazing results for Celsius. In that comparison with the S&P 500, $10,000 invested in Celsius would have grown to $716,888 or a 126% CAGR versus $22,796 or a 17% CAGR if invested in the S&P 500. This demonstrates tremendous outperformance for Celsius. However, a Celsius investment would have been much more volatile with a 79% standard deviation versus 18% for the S&P 500. Celsius outperformed the S&P 500 in terms of the best year performance, for which Celsius grew 942% versus S&P 500 31% gain, and outperformed the worst year performance where Celsius actually grew 39% versus the S&P 500 18% fall. In terms of max drawdown, Celsius fell 50% compared with the max drawdown of 24% for the S&P 500. And surprisingly, Celsius did outperform the S&P 500 in comparisons using the Sharpe ratio and the Sortino ratio. Clearly Celsius has performed exceptionally well. Now let's hop over to market share and take a look at Celsius's market share. Here we have the dashboard, where we can quickly gather a lot of information at a glance. Expanding the dashboard, we can look under beverage and see that Celsius is categorized as a non-alcoholic beverage. Expanding the non-alcoholic beverage tab, we can see that Celsius is one of the smallest companies by revenue but is rapidly gaining market share. Let's look closer at the year-by-year changes in market share. So we come down here and type in the ticker symbol for Celsius, CELH, and see that the market share is 0.14% out of the publicly traded food, beverage, and restaurant stocks currently in the market. This is tiny market share, but importantly, Celsius is very quickly growing its market share. The 5-year market share CAGR for Celsius is 90.92%. If we start in 2019, we see that the market share was 0.01%, 0.02% in 2020, 0.04% in 2021, 0.07% in 2022, and rose to 0.14% over the trailing 12 months. Celsius essentially doubles its market share every year. In this version of market share, we can also compare Celsius to a peer company such as Monster Beverage to get a better understanding of the market's dynamics. Here we see that Celsius is the smaller of the two companies, with Celsius generating just over 15% of the revenue from a combined basket of the two companies. But Celsius is still growing relative to Monster Beverage. This means that Celsius is gaining market share on both a relative basis when compared with another fast-growing beverage company and on an absolute basis. This is very, very good. Let's take a look at the fundamentals. Gross margin is 48%. This is a bit lower than other similar beverage companies. Revenue has compounded at around 105% over the past 5 years and has reached over $1.32 billion most recently. Celsius's revenue growth is just beautiful to behold. Looking at cash flow, we see a 242% CAGR over the last 5 years for operating cash flow, while capex has worsened at a 286% CAGR. As a result, free cash flow has grown at a 237% CAGR. Though the rate of capex expansion is faster than that of operating cash flow, capex is so much smaller than operating cash flow that free cash flow has grown tremendously. I expect free cash flow to continue to trend upwards. Weighted average shares outstanding have risen over the last 5 years, going from 193 million shares in 2019 to 237 million shares most recently. Celsius has been busy diluting shareholders. The rate of dilution is about 5%, which for a slower growing company would be very bad. Given that the company produces so much free cash flow, I hope they plan on using some of that for share buybacks to slow or negate shareholder dilution. Now let's view return on invested capital. Return on invested capital has risen from 13.7% in 2020 to 38.7% in 2023. Very nice work, management team. Celsius has gotten much more efficient in managing the business over time. Another favorite metric is cash conversion cycle, a measure of operational efficiency regarding supplier and payer leverage as well as inventory control. Going from 101 days in 2019 to 117 days most recently, Celsius has gotten less efficient over time. However, there is improvement from the peak of 201 days in 2021. While this value is exceptionally high, it does seem that Celsius is working its way through its inventory and also improving its sales structure. Next, let's look at Celsius's debt. The net debt to EBITDA has fallen a lot over the past 5 years, going from 10.6 in 2019 to -2.8 most recently. Flipping from positive to negative net debt to EBITDA while being a profitable company is a very strong sign for the company. The fundamentals of Celsius are frankly excellent. In any event, should it be added to the portfolio? Before sharing my final thoughts on that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, let's get into my final thoughts. Okay, let's go to the spreadsheet and write out some key values for Celsius. It is a beverage company with a gross margin of 48%. The 5-year revenue per share CAGR is 93% and the 5-year free cash flow per share CAGR is 220%. These are just shockingly great metrics. A return on invested capital of 39% is excellent and appears to be continuing upwards. Next, the cash conversion cycle of 117 days is very high but is improving. I would expect this value to fall over the next year. Concerning debt, a net debt to EBITDA of -2.8 means that Celsius has more cash than debt and is a profitable company. The fundamentals of this company are clearly outstanding. Now let's switch our attention over to valuation. Celsius is overvalued relative to the S&P 500 with a ratio of 3.9. The price to earnings growth, or PEG ratio, is 2.4, indicating that Celsius is overvalued relative to projected earnings growth. Celsius continues to be a producer of massive free cash flows with both market share and revenue growing rapidly. Clearly, Celsius has product market fit. With this massive cash flow, there should be no more need for equity cash raises, so future dilution is likely going to be from stock-based compensation. I do think the company should institute share buybacks, but just enough to stop the shareholder dilution, as the company is clearly overvalued. Fundamentally, the company does not seem to have flaws. This sentiment is likely widespread, as it seems to be reflected in the valuations, with Celsius being overvalued compared with the S&P 500 and its predicted growth. I find trying to jump into this stock like trying to jump into a jump rope made of titanium nanofibers moving at light speed. It feels dangerous, but that may just be fear outweighing greed. I am definitely enticed and will add it to the watch list. Many thanks for watching. What do you think about Celsius and its massive growth? What are some other food, beverage, and restaurant companies you want analyzed? Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now and don't forget to put your money where your mouth is.